Hi, everyone. Good morning. This is Matthew Cruz at Comstock Investments. I'm going to be sharing with you the August USDA supply demand report that came out at 11 a.m. Let you kind of quickly read through our disclaimer here that futures trading does involve risk. If you noticed, I picked up a little bit of scruffiness. I've been in Alaska the last couple of weeks, and so been out hiking and seeing some glaciers there. So that's I just wanted to give you a heads up. That's why that got that scruff going on. So starting out here, take a look at old crop in U.S. grain ending stocks. Not much news there. Things pretty much came in on track of what the trade was looking for. Corn came in at 1.457 billion bushels, maybe a tad higher than what the average trade was looking for, 1.411. Beans at 260, estimate was 252, and wheat was about right on the money at 580 versus 579. Looking at the corn for new crop corn ending stocks came in at 2.2 billion bushels, very close to what the average trade was looking for at 2.197. So the trade overall did a good job estimating what the ending stocks were going to come in at. So overall, I'd say it was fairly neutral, maybe slightly bullish, just because a lot of that was priced into what the market was looking for. It's been obviously down here pretty hard, and so I think the market's kind of beat into those numbers pretty hard. Beans were 245, a little less than what the average estimate was looking for at 260. Wheat was at 615 versus 595 million bushels. Overall production modestly lower than what the average trade was looking for. You can see we're down here from last month's 15.32 billion bushels, came in at 15.11, and most of that's obviously just due to a decrease in yield. And this is what, of course, has been hotly debated the last month or so, that we've seen a yield decline starting from a couple months back at 181.5. Last month we were at 177.5. They shaved off another 2.4 bushels, which I think, that's obviously what the trade was looking for. It came in pretty close, looking at 175.5, and actually came in just slightly less than that. Similar situation in beans. The average yield reduction was at 51.2, and they came in at 50.9. It's pretty close, in terms of what the trade was looking for. Overall production came in at 4.2 versus 4.234. So that's why I say that overall, I think the report was fairly neutral, just because I think the trade did a fairly good job of coming in at what they were looking for in the market. Maybe modestly bullish, just because I think that the market had a lot of this priced in. And so hopefully now we're going to find a bottom here. We'll see what happens, just because I think the market has been looking for this, and we've gotten this uncertainty behind us now going forward. Looking at global supply, Brazil's soybean crop, they kept that at 156 million metric tons. They are starting to come out with next season's production numbers already, and those are at 163 million metric tons. So they're looking for a modest increase in acres in Brazil again, which is no surprise. And then I think a rebound in production in the southern part of Brazil, which has gotten hit pretty hard the last couple of years. Looking at corn, they increased that from last month's 133 to 135 million metric tons. And so the USDA is continually increasing that. However, CONAB has been a lot slower. They increased the CONAB's numbers to 129 million metric tons. And so there's still a pretty big divide between what Brazil is saying they're going to produce and what the USDA is saying they're going to produce. And so not sure how to explain that discrepancy. I think the USDA is getting a little bit ahead of themselves, in my opinion. But I do think that the crop is a big crop. I'm not saying it's not, but I think that the USDA is overstating that a little bit. Looking at Argentinian soybeans, they kept that at 25 million metric tons, and so no surprise there. I think we're past the harvest enough now that those numbers are pretty solid. Corn's at 34, they kept that the same. And then similar situation, they kept the numbers the same for Ukraine's corn production at 27 and wheat at 21.5. Looking at global ending stocks, corn came in at 311.1 million metric tons. So quite a bit lower than the average trade was looking for. So that was a little bit more bullish news there. Soybeans were about right on the money, 119.4 compared to 119.7. And then wheat was at 265.6 compared to 266.1. Looking at Chinese imports, they did increase the soybean imports by 1 million metric tons from 99 to 100. And so that's pretty good news. The export, I guess, idea or debate has kind of gotten beat up here in the last several months or more. And but the USDA is saying that they still think that the soybean imports or exports, I should say, to China and Chinese imports are still going to be fairly healthy. And then they kept those corn production numbers the same corn export numbers the same at 18 million metric tons, down a little bit from last year at 21.9. So breaking down the U.S. corn balance sheet, seeing how we get to those numbers, you can see that those acreage adjustments from last month stayed the same, 94.1 million acres. Here we see the yield adjustments down by 2.4 bushels per acre. Now that would have been a pretty huge adjustment lower, 209, but as we suspected that the USDA offset that in other ways from by reducing demand. And so starting out, they increased beginning stocks from last year by 55 million bushels. The part of that came from a reduction in exports of 25 million bushels, and also a reduction in feed usage by 20 million bushels. And so that's how we're starting out. We already start to offset that 209 million bushels by 55 right there. And then looking ahead to next year, they reduce exports by another 50 million bushels, in addition to reducing feed and food usage by 25 and 20 million bushels respectively. So we're kind of rearranging the deck chairs a little bit, where we did get what we wanted in a reduction in yield. However, the overall market reaction is going to be muted because they offset the demand side of it. And so that 209 million reduction in corn production really only gets offset at the end by 60 million bushels is where we reduce that. So down to 2.2 billion bushels, which is still a pretty healthy carryover in ending stocks, unfortunately. And so that's going to keep, I think, the market kind of depressed, unfortunately, where it's at right now. And so we're going to need to see either further yield deterioration or kind of an increase in demand someplace. And so at 2.2 billion bushels is just too much corn right now, I think. Looking at soybeans, it's kind of the opposite situation, where we saw a reduction of 1.1 bushels per acre. That's kind of what the market was looking for. They did see an increase in beginning stocks from last season of 5 million bushels here, I should say. And that's just because of a increase in imports that carried over from old crop, I should say. They did offset that a little bit by reducing exports by 25 million bushels. And so overall, we're reducing ending stocks by 55 million bushels from last month's 300 to 245 million bushels for new crop. And so that's overall, it's a very tight ending stock scenario for soybeans, either way you cut it. We'll continue to monitor this, but anytime you get down to, I think, 200 million bushels in soybeans and ending stocks, it's very, very tight. It's kind of pipeline supplies, in my opinion. And I think that the USDA is been doing their best to try and artificially prop up those numbers a little bit. In my opinion, anytime they get a reduction in yield or in acres, they offset it someplace else in demand. And so I don't think the demand is quite as bad is what the market or the USDA has kind of led us to believe in the case of the soybeans. And so it wouldn't surprise me if we're already down to that 200 level. And so I think the long-term perspective for soybeans prices is still very good. I know we've sold off pretty hard, but I still think that hopefully we get a rebound today. and a lot of that negativity gets behind us, and uncertainty behind us moving forward. Looking at the wheat, we did see a modest increase in planted area, 200,000 acres. We did offset some of that though with a dropping 0.3 of a bushel per acre. And so overall that dropped production by 5 million bushels. Now we did offset some of that with a decrease in exports of 25 million, also in food usage by 3 million. And so overall, we actually add 23 million bushels to the ending stocks. That takes us up to 615 million bushels. And so not great news in the wheat market today. So you kind of see here, this is December corn. This is not the close. But at the moment now, we're down 5 in December, and so we've still, kind of the markets hasn't responded positively to the market, to the report that came out today, and so we've obviously sold off pretty hard from this 570 level. We've given back 70, almost 75 cents here in the last couple of weeks or more, and so we've kind of just sitting at this bottom right now, looking for more information. The market needs more bullish information, and really it's not getting it right now. And so you're looking at the forecast, we've gotten a lot of good rainfall, and there's not enough dryness in the market yet, I think, to for the market to kind of move higher at this point. And so it's just kind of sitting and waiting here, and probably going to trade sideways for a little while until we get some more information, either for better or for worse. And so you can kind of see here that we've sold off, fairly hard here after today. Let's see, we were up at in December, we were at 507 at one point, and so now we're down at 491. And so looking at jumped ahead here, looking at new crop soybeans, kind of similar situation where we're down 4 at this point, and then the beans have been all over the place, having these real large trading ranges, which makes it real difficult to trade. So we've been had a 33-cent trading range for the day so far, and this is not the close, but so I'm gonna imagine that we're gonna close pretty close to where we opened for the day. And so a little bit more positive news in the soybeans. So I'm hoping that we've formed a bottom. We can see here that we bounced back hard off of our lows last week here, close to this 1282 level here. And hopefully we can form a bottom. And I think that today we got a little bit more ammunition and more argument for the market to move higher. But the corn and wheat market can kind of weigh on that too. Looking at the wheat, similar situation to the corn market. Let's see, we're at the moment we're down 8 cents, and we did kind of form a little low that we bounced off of, but similar situation that we're still kind of looking for more. We need more bullish information. We need to keep this bull fed if we're going to find our way back higher. And so tremendous amount of volatility here. And this is not the close, but so we're looking for any news right now, and so far we're not really seeing it here, that anything in the near term. There's just too much positive information. The last 6 weeks or 4 weeks, we've had pretty good rainfall in a lot of areas, and I think that's mostly what the market is looking at. So overall, if you're a bull, you're going to talk about that some of the earlier crop drought damage that we've had is irreversible and it's not coming back. You're going to talk about the higher acreage that we had in the corn, is generally could mean lower yields yet to come. A lot of the export market, continues to be a hot mess over there in the Ukraine, and just seems like every few days or every week we hear something about Russia bombing some dry port area. in the Ukraine. That's going to affect their markets there, and affect their exports. Chinese imports are still fairly strong, despite a lot of negativity that we hear. And so I think these lower prices are probably going to lead to healthy demand, I think, as well. And so I think typically we see China come in when we see these lower prices, and so that'll hopefully lead us to another rally down the road here. A lot of that Argentinian crop has been harvested, and it's impaired and not coming back. If you're a bear, you're going to talk about how the drought area is diminishing, and we've had really good rains here in August so far, which is extremely important. That's when your soybean crop is made, and in our specific area of Iowa, we had a lot of areas that got 3-4 inches of rain, and so that's pretty much going to carry us to the end of the growing season in a lot of those areas. And so we should have pretty good fill, I would think, in those areas. If you're also going to talk about how the grain corridor remains open, and interest rates continue to rise, which could weigh heavily on the economy and weigh heavy on demand as well. So I want to thank you for watching. If you're interested in more of our premium content, you can subscribe to our report online at Comstock.com. Thank you and have a nice day.